Hi, good day. Welcome to CMS. Till now we finished all the required calculation for quantity surveying and cost estimation and scheduling for the project, which give us a clear picture for our project cost and time. We need to confirm either our project have a proper feasibility or not. This is very important actually for all the developer who is working in the real estate and all the consultant who is making the design for clients to ensure that their design have a proper feasibility and will make a good profit for their clients. Let's see now how the CMS will make a proper calculation in feasibility study of the project. Click the feasibility study and follow the required steps. Step 1 is to insert the selling strategy, how we will sell our project. Step 2 to insert the land cost, because of course the project have a land price plus the other expenses during the execution. Step 3 is the marketing plan. What is the plan for selling the project? Step 4 here to run the report. Step 5 to render the report. At the end you will have our report of the feasibility study. So let's start now with the selling strategy. Step 1, selling strategy for the sellable area. Here you will enter the number of the units of the project, the total sellable area per meter square, the selling price for the square meter. Suppose you will insert here the description of the units. Suppose you have villas or apartments, the type of the apartment. You can here put your clear description for the units of the project. Here you will put also the number of the units for each item, put the sellable area for each item, and the price of the square meter, how much you sell your unit per meter. At the end you have the total price of the selling for all the project. According to our project, we have here, for example, this amount 381 million as a selling price. Of course, we are putting here the common selling price in the market. Then you have to insert here the project selling method, how you are planning to sell your units. Suppose you are making a marketing plan with advance payment and installment within years. For example, here we intend to make an advance payment 10% and will make installment for 5 years, and the installment will start after 1 month from the advance. Of course, this you can change according to your requirement and according to your plan. And also this, after receiving your report, if you didn't satisfy the report, you can change, because CMS will give you now the figure for your required amount during the construction and after the construction. So if you are satisfied with this report, you will keep the plan, or you can change the plan according to the report results. So we'll take now step by step, and at the end it will be clear. There is another expenses. The expenses not only for the construction, as we did. We already now, according to CMS, we have now the full cost of the construction only. Of course, there is another expenses during the construction from your side as a developer, because till now, or we give the figure or the budget of the project from the contractor point of view, or from contractor perspective, how much this project will cost for material and labor and overhead and some taxes or fees. Further to this, there is another expenses from the developer point of view, which is the marketing cost and the selling VAT and the profit tax, and also the monthly administration during the execution, and also monthly administration after the execution. As a developer, you will still selling your units and receive an installment, and you'll have some overhead and administration after the execution. So this also must be considered. So what you will insert now here, you will insert here the additional expenses, which is the marketing cost. We consider here as a 5%. We're considering also a tax for the registration after selling the units, which is 5% also from the selling price. We can consider also the profit tax, if it's 5 or 10 or 20% according to your country. We'll consider here at 10%, plus also here the discount rate, which is the annual interest from the banks. When you are taking any loan from the bank to set up your project, you have to pay an interest or a discount rate. And this also must be considered. At the end, CMS will give you the figure and will give you the evaluation for your project, either it is feasible or not, comparing with the discount rate in the banks, and they will calculate the internal rate of return depending on this. So that's some of the required addition expenses. Also, as we said, we have to insert also the monthly expenses or the monthly administration during the construction. We consider here as 40,000, and also the monthly administration cost after the execution, and we'll consider here as a less amount for 5,000, because it will not be too much administration cost there, only like an accountant who's looking after the installment and arrange for the receiving finance. One of the other important expense is the land cost. Normally, as a developer, when you are going to make a construction, of course you need a land to set up your project there. Either you will purchase this land, or you will share this land with a landlord. There is some types of sharing between you and landlord. We already summarized here in CMS. We provide 5 options. The first option is sharing the sales revenue by a percentage between the developer against the landlord. That means this amount, which is the value of the selling revenue, will be shared between you as a developer and a landlord. Suppose you don't need to purchase a land, you will start the construction or you will make the development. Meanwhile, you will share the landlord, take a percentage. This percentage must be agreed between you and landlord. So let's take this example, and now we'll talk about this percentage. Here you have to add this percentage, sharing the selling revenue to the developer with percentage of. That means what is the percentage you will take as a developer. Suppose you will agree to have 60% as a developer. The second option is to share the revenue between you as a developer and the landlord. Same time, you will give him an advance as a refundable. In this time, the landlord will agree for this sharing, but he'll ask you in advance that he need from your side some amount as an advance, and it will be deducted from his revenue amount. The third option, sharing the sales revenue by percentage between the developer against revenue percentage and non-refundable advance to the landlord. In this case, the landlord will ask you for advance and not to be deducted from his revenue after selling the units. Option 4, developer against revenue percentage, non-refundable advance and refundable amount to the landlord. In this case, the landlord will ask you for a percentage of the revenue and advance, it will not be refundable, and a refundable amount will be deducted from his revenue after selling the units. The last option is purchasing the land plot by the developer. The developer decides to take or to purchase the land from the landlord without any kind of sharing with him. We'll discuss all these options and we'll tell how to insert in CMS. Let's talk about the first option, sharing the selling revenue by percentage between the developer against the landlord. We'll agree for 60% for the developer and 40% of course will be for the landlord. In this case, if we take the 60% as a developer and 40% for the landlord, you will find the total revenue from your side, which is 60% of this amount. It will be 228. But what is your expenses? Your expenses is the construction cost, which is 264 million, plus the marketing and the other expenses, which we talked about already. The net total revenue for a developer, which is 60% of the total revenue, it's 228 million. Meanwhile, the total net expenses, which is the construction cost, 264, plus all the other expenses which we mentioned here, the marketing cost and the profit tax and registration tax and all the administration, coming for 282. That means this percentage is not fair and cannot be considered. So this must be changed. Let's try a 70%. Now we are a developer and we need to check how to deal with the landlord. Even 70% is not enough because the revenue will come for 266, but still your expense is 289. In this case, you already reach for 70% as a developer and 30% for the landlord, and you still have a lose, in this case the market price here is not feasible. Either your market price is not feasible or the sellable area of your project is not feasible. In this case you have to either to increase the sellable area or to make some advantage in your project to increase the selling rate price. Let's propose a solution now to increase the sellable price, but after give an advantage for the customers by increase the installment period instead of 5 years to be 6 years. This will give some advantage and we can accordingly increase the price of our sellable unit. So let's increase the sellable rate here for 15,000 for this apartment, and here make it 13,500 for this kind of apartments, and let's make 12,000, and for the commercial make it 17,000. So that's the new selling revenue or the new selling price for the project. Accordingly you will have here the net total revenue, which is 70% of the selling revenue, 327 million, and in this case your total expense will be 301 million. We will observe here that the price or the cost also will be increased, the developer percentage is increased, and also the years of installment or the duration of the installment is also increased. So we have increasing in the marketing cost and increasing in the installment and the administration cost. Let's see now how this number is calculated. We know how the total revenue is came from the profit sharing between the developer and landlord, but now let's see how this number is came by checking now the marketing plan. We divide here the marketing plan for 10 stages. CMS consider that you will sell your project unit in 10 stages. The total percentage of this 10 stage of course must be 100%. We'll consider in stage 1 we will sell 5%, and this will be after 3 months of your starting execution. Stage 2 also 5% after 5 months of your starting the execution. Stage 3 you will sell also 5% after 7 months of starting the execution. Stage 4 you will sell 5% after 9 months of starting the execution. Stage 5 10% in 11 months of execution. Stage 6 10% after 13 months of execution. Stage 7 15% after 14 months. Stage 8 15% after 15 months. Why we are increasing the percentage? Because when the project is coming as a reality, it will be a good advantage for the customers to purchase immediately. Stage 10 you will have 15% in the month of 17. You will find here CMS makes a full plan and inform how much you will take every month. If you try to change any of them, it will be changed easily. And if you will sell stage 1 in the first month, you will just put 1, the number will change. Stage 2 you will decide it to be in second month, the number will change. And if you consider in the second stage will be a 10%, also the number will change. In this case you have to, of course, this all total must be 100%, but now it's 105. That means you will remove the 5% from the end. If you consider that in stage 3 it will be also 10% in month 5, it will be considered. It will give you a good opportunity to change your plan easily and to compare your plans with each other. At the end, these numbers will convert it to a cash flow, or let's say it will be converted for an income cash flow. It will be compared by the outgoing cash flow and will tell you what is the required capital to execute your project. So that's the plan which is required from your side to insert, how you will insert the percentage in each stage and when you will do it each month. Not necessarily to go for the 10 stages, maybe you will go for only 5 stages, 20 20 20 20 20, 5 stages for 20%. Okay, finish, no problem. If that's your plan, if the market is open and have a good opportunity to sell your units easily in 5 months or in 3 months or in 4 months or whatever, in 5 or 6 stages or in 2 stages or 3 stages. This is according to the market and according to your plan. You will put your plan, okay, and in which months. That's what you require from your side for your marketing plan. It's very easy. Let's see how he calculates. CMS considering here the marketing cost, which is 5% as you inserted. That's the cost of the marketing. He distributed also all the expenses for the marketing cost. Registration taxes, which is 5%, also CMS distributed. It will be, of course, it will be paid during the selling. Here is the monthly revenue, which is coming because of this income cash flow. That's the cumulative of it. That's the annual revenue. You have a big chart here. So each year you will have the annual revenue and of course annual expenses each year. Already CMS calculate everything. You will not do any effort for this. And that's the cumulative net profit. So again, you will insert the selling strategy, how much you will pay. You will provide the method of the land cost, and we will still talking about this now. We're still in the first option. You will insert the marketing plan, the stages, then run for report. The step 4 is complete. We go for step 5. Investment evaluation report is ready. Thanks for waiting. Go to report. When you make render, you will go for the report. The report is telling you here, that's your investment evaluation. First year you will have a net profit with minus 100. That means you have to pay this 100 million because you have an expense 123, but your revenue will be 23 only. Second year is minus 81 because you'll have an expense almost 146 and your revenue is 64 only. Third year it will be positive. Fourth year positive. So the next will be positive. The net profit, it will be 40 million, which is a difference between 343 and the 303. But this is not only the way to evaluate your project. You have to also check about the final evaluation from CMS. He's telling you now that's the project cost, that's your revenue. The period of the project is 23. The period of the investment is 89 because you give an installment till 6 years, plus also the last date of your selling. So you have an investment period for 89 months. That's the net profit. That's the net profit ratio, 22% within almost 7 years. The internal rate of return is 5.9 and the net present value is 4,539,000 and the profitability index is 0.96. Actually, that's your target. According to your company policy, you have to confirm either this numbers is suitable for your company or not. This must be confirmed by the top management of your company according to your company policy. CMS is giving you this amount for your site to take the required action. If you are not satisfied with these numbers, either to change the sellable price and enhance your facilities to increase the sellable price, or to increase the sellable area in your project, or to change the marketing plan. Let's take an example now. If we change the marketing plan only, what will be the results? Let's remember that the IRR is 5.9, net present value 4,500,000 and profitability index is 0.96. Let's change now the marketing plan and we'll see what will be the results. We'll tell here we'll sell first stage 10%, second stage 20%, and this fourth stage is 10%. Let's see the numbers in the report. IRR changed to 10%, net present value changed to 29 million instead of 4 million, and profitability index changed to 1.12, more than 1, which is required. So changing only the marketing plan will change your report. Changing also the selling method let's say 15% an advance payment instead of 10, what will be the difference? Let's see the report. The IRR changed to 11%, net present value changed for 31, and also profitability index increased, and the capital which required for do your project is decreased. When you increase your advance payment which will take from your customers, of course your capital will be decreased. Let's make another trial. Take 25%. Let's see the report. Required capital, instead of 150 it is 125 million, and your internal rate of return is increased, your net present value is increased, your profitability index also increased. So there is more to do to increase your profit. CMS gave you a graph between the cumulative expenses and the cumulative revenue. All this gap in the center must be covered by the employer. How much for this? This is the required capital, 120 million within 2 years. How it will be paid? First year almost 63 million, second year almost 61 million, the next years it will be only a revenue. Next year the cash flow with positive, first 2 years the cash flow with negative. How it will be expenses? Like this. That's the expenses required per month, every month. That's the variance between the expenses and the revenue for almost 23 months, 2 years. That's what CMS will present for you. Again, what you will do only is to insert your selling price, your plan for selling, your other expenses, how you will deal with the landlord, and what's your marketing plan. In next video we'll take an examples how to deal with the landlord with the other options. Thanks for watching and see you.